Hi, Lee Phillips. I want to go over your real estate and using it as a tax shelter. Real estate is one of your two best tax shelters. And people who invest in real estate, somehow they get rich. Most people who invest in real estate don't really understand. I understand that the tenant pays the lease for you and the real estate appreciates and all of that sort of thing. But one of the things that even real estate investors don't really understand is real estate is maybe your best tax shelter. It's incredible. Ben, who works with me, he was a former special auditor agent of the IRS, and he tells the story. When he first went to the IRS, his trainer said, okay, here's a stack of tax returns, pick out the ones we're going to audit. So he went through and he picked out all of them that had a loss and gave them to the trainer, and the trainer looked at him and said, we don't audit the real estate ones. We expect real estate to have a loss. Real estate produces what we call an economic gain at a tax loss. Economically, you're getting ahead. Tax-wise, you're getting a loss. That's the best of every world right there. How does it do it? Well, there are lots of different ways that you can use real estate as a tax shelter. The standard one is we have our rental unit and we have all these expenses with it. We have the insurance and the taxes and the upkeep and all of that sort of stuff. And you're saying, well, yeah, I don't like expenses. Well, okay, expenses are expenses. They're not good, but we get to take them off as a deduction when the guy pays us the rent. So he pays the rent, we reduce by all of those expenses. There's another expense though. The other expense is the depreciation. You get to depreciate your real estate over its class life. Now, a class life in real estate is 27 and a half years for a residential property, 39 years for a commercial property. So you take 1/27th and a half of the value of the property and you get to deduct that as a deduction against your taxes. So the guy pays the rent, you get the rent, but between your standard expenses and the depreciation, you can usually offset the rent. So it comes to you tax-free. Now you use that rent to turn around and pay the mortgage, right? So you're leveraging your investment because you've borrowed and you're paying down a mortgage. But the renter is paying the mortgage for you, and it's not income to you. You're paying the mortgage off with basically a tax-free dollar. In fact, usually you actually have a tax loss. Well, that tax loss will carry forward, and ultimately you use it when you sell a piece of property. But you can go through the whole life of this piece of real estate and always generate a loss with the rent coming in, and you can even pocket the rent in addition to the amount that you pay for the mortgage. We can get a positive cash flow. So it's great that way. Now, real estate also appreciates. If it's your personal house, you get to take off $500,000 if you live in it 2 out of 5 years and you're married and blah, blah, blah. That is a tax shelter. Your own home is a tax shelter. You get to use the house, and the mortgage is tax deductible to you, the interest that you pay on the mortgage. The rent that you get in when you rent an investment property, that comes to you as what we call passive income. But passive income is not subject to the self-employment taxes. Social Security, FICA, FUTA, all that crap. I call them the social taxes. That's just Lee's word for it. But it's not subject to that 15.3% hit that you get when you sell an item, when you go to work, when you consult. If you have earned income, it's subject to the 15.3% self-employment or social tax. So the rent that you get in, you automatically save that 15.3%. That's another tax advantage to the real estate. We have all kinds of things. We can do cost segregation studies. We can do 1031s. We can accelerate the depreciation. We can get the bonus depreciation. We can do all sorts of things with real estate in order to make it so that it's an incredible tax shelter. This is Lee Phillips. I'm talking about using real estate as a tax shelter. Now, share this with your friends, and don't forget to subscribe. We put out these at least once a week. I do a video, and well, the goal's once a week. Okay, we're doing pretty good at it though, and so subscribe, and you'll get notices of those, and you can actually get my 10 tax tactics. Not specifically on real estate, but it will show you 10 ways that you can lower your adjusted gross income, your AGI. And the wonderful thing about real estate is it comes in what they call above the line. If you have a loss, it's actually lowering your adjusted gross income, which puts you in maybe a lower tax bracket. You get your child deductions. You can qualify for not 199A. You can do all sorts of things if your AGI has been lowered. So the name of the game is actually to lower your AGI, and real estate lets you do that.